Listen up, because this is the raw deal nobody tells you loud enough. Trying to build a truly diversified portfolio just from private equity stakes is a beast, and most of you are already stuck feeling it. You've poured capital into what you thought were varied bets. But guess what? When markets wobble or a single sector tanks, you suddenly find yourself exposed, vulnerable, damn near trapped. The frustration is real. The pain of watching your carefully picked LP interests turn out to be tightly correlated hell, where your so-called diversification is just an illusion wrapped in fancy words. And if that feels like a punch in the gut, good, because it should. Here's the brutal truth you can't afford to ignore. Private equity stakes are often clustered, whether you like it or not. Same vintage years, similar strategies, overlapping industries, or managers who hang out in the same circles. If you don't actively work to break that pattern, you're not diversified, you're gambling blind. So stop fooling yourself with surface-level diversification and start digging where the real opportunity hides. Step 1. Stop thinking of diversification as a box to tick. It's not about having a dozen LP interests sprinkled across funds. It's about how those funds behave together when the market shifts and chaos hits, because that's the moment you'll see if your diversification holds or crumbles. So demand granular data. Insist on understanding exposure to sectors, geographies, and deal types down to the individual company level. You want an LP portfolio that survives storms, not just shines in calm weather. Step 2. Stop copying the herd. Everyone throws money at late-stage growth tech because it's the hype, but guess what? That's exactly where correlation spikes and systemic risk builds up. If you're serious, you shift your focus. Early-stage deals, sectors others overlook, complex structures like secondaries or direct co-investments where you can really pick assets apart. That's how you gain edge and real diversification. You want LP positions that look nothing alike, that react differently when the world pivots. Step 3. Network like your portfolio depends on it, because it does. Don't just chase funds. Build relationships with fund managers who are transparent, who offer you access to side letters, co-investment opportunities, and direct deals. These are the levers that let you control your risk actively, not just passively ride along. That's how you create a web of complementary stakes that don't collapse as one. Step 4. Get systemic insight, not just financial reports. Political shifts, regulatory changes, macroeconomic trends, these are your enemies if you don't factor them in. Your private equity stakes don't exist in a vacuum. You need a perspective that cuts through the noise and sees how invisible threads connect funds. Use that insight to reposition, rebalance, or double down where others panic. Step 5, and this is critical, stop waiting for a safe formula. There is none. The world's too unstable. Private equity isn't venture capital or public markets. It moves slow, but it hits hard when it cracks. Your job is to embrace that, plan for the worst, and structure your portfolio so the downside is manageable, the upside scalable, and the whole thing adaptable. That means constant monitoring and ruthless decision-making. No excuses. This is the rare breed of funder, the one who sees beyond the surface, who knows limited partners aren't just passive check writers. You're architects of complexity, orchestrators of asymmetry, and that means you must obsess over uncorrelated returns with surgical precision. You're not building a lazy safety net, you're building a dynamic fortress. At the end of the day, diversification with private equity stakes isn't about pouring money everywhere and hoping. It's about tactical, hands-on management that blends data, relationships, structure, and strategy into one coherent, powerful system. Own that, demand it, execute it with the ferocity this space deserves. Because the moment you settle for anything less is the moment you become part of the herd, and the herd always gets devoured. So take this firm. Stop chasing easy answers or the shiny narrative of diversification. Dig deep, demand detail, act fast, and push every single LP interest through a crucible of scrutiny. That's how you break free from the illusion and build a portfolio that doesn't just survive, but dominates whatever comes next. The question isn't if diversification is possible with only private equity stakes. It's whether you're ready to do what it takes to make it real. No compromises, no shortcuts. Just clear-eyed, relentless execution. Subscribe to our YouTube channel and check the featured link to learn more.